Grade 10 student. So in today's video we are going to do the whole question paper for paper 1, so that you guys will be prepared when you go and write your paper 1. So guys, if you are coming here for the second time, for the first time, you have been watching our videos and you have never subscribed, guys, don't be greedy. We have been assisting you for a very long time. To subscribe is free of charge. So if you didn't subscribe, guys, you're gonna struggle to see part 2 of this video, because part 2 of this video is going to appear to only those who subscribe to this channel. To subscribe is free of charge. Once you subscribe, wait for an hour, you're gonna see part 2 of this video. It is gonna appear on your playlist. However, guys, for part 3, of course, it's for membership. So membership is the one which is only costing from R190. You just click join option and you're gonna proceed. Okay, it's only R1.99. okay, and also, guys, in this video, maybe before we start with the first question, I want to emphasize the scope of paper 1. So the scope for paper 1, number 1, you must expect accounting equation or analysis of interpretation. Number 2, you must expect debtors ledger account or creditors ledger account. One of the two, they will set one. You must also expect income statement, notes and the balance sheet, and the ratio, which is also known as analysis and interpretation. Also, guys, you must also expect salaries and wages, which the probability of coming is also less, because some province they exclude it, but some province they include it. So you must just practice it a bit, so that if it comes, you must know what to do. But a major important question that I want to emphasize, guys, for paper 1, income statement and balance sheet. That one is a must. Accounting equation is a must for you to know it. Debtors ledger and creditors ledger, as well as ratio, guys, this one are coming. The one that you see on the screen now, this one are coming. There is no way that they are not going to come. Okay, so which means that you have to make sure. So it's gonna be out of 150 and you will be given only 2 hours. Make sure that you write as fast as possible so that you can master this. Okay, let's start. So here we have a accounting equation, which was question 1. Obviously, even on your final exam now, this is going to be question 1. Okay, they said Andile Makoti is the owner of AM Store and AM Store sell men's clothing, and Andile use a fixed markup percentage of 65% for all merchandise sold. There is a 50% that markup that we need to calculate cost of sales every time we are given a sales. Okay, he also employ a tailor to do alteration for his customer. He use fee income. Anything that is related to alterations, guys, we have to record it under fee income, not sales. Okay, which means that no markup must be applied here. Required, analyze 3 of the following transactions according to the example given. Accounting table, it was like this. Accounting equation table. Assume that the bank balance is favorable in all transactions. Okay, transaction number 1.1, purchase a t-shirt on credit to silver traders at 35,000 less 10% discount. We purchase a t-shirt. T-shirt to us is a stock, which means that a stock is going to increase because assets increase on the debit. We have more stock. That's why trading stock is debited. Okay, what has increased now is debt, because we didn't pay anything, which means that creditors control is going to indicate to us that our liability has increased. Once you debit, other one must credit. You can't debit both and you can't credit both in accounting. Okay, Now let's show. Already we said assets increase is plus, this side is also plus, liability increase. Now the question is, are we going to record 35,000? No. We must subtract 10% discount, which means that we are going to record 35,000 multiplied by 90 over 100. This is going to give you a straight answer of 31,500. 31,500. Just like that. Okay. The next one, cash sales of merchandise, 14,355. Cash sales, which means that the bank is affected because we receive cash through sales. We sell and we receive cash. Bank is an asset, it's going to increase. Bank, and obviously we're going to have a sales, or you can write cash sales, it's fine. Sales increase equity, which means that it's a plus. When we receive money, it's a plus under bank, which means that we receive how much? 14,355. 14,355. Now the question is, what about the issue of markup? Because we must record what? We have to indicate that because we sold, inventory goes out. Guys, when we sell something, customer give us cash and we give them inventory, which means that inventory went out. We must credit inventory. And remember, cost of sales is equity. And in equity, expense are recorded on the debit, income on the credit. How much are we going to record now here? Obvious, we have to apply markup on this 14,355. 14,355. Our markup was 65%, which means that on top we must put 100 as always, and markup is 65, it's 100 plus 65, which is going to give us 165. Okay. If I did this calculation correctly, it has gave me amount of 8,700. You must verify because I was using a cell phone to calculate, but otherwise this calculation is correct. You must get 8,700 if you punch this correctly, and or if I did mistake, which means that you will know that this is how you calculate it and you must get the answer just like that. That's the principle that I want you guys to learn. Okay, the last one. Before we go to the last one, guys, I hope you already subscribe to this channel. The more we have less subscribers, the more we don't do paper 2. I'm going to check if more people who are watching this video have subscribed so that I can do paper 2 for you. If less people subscribe, which means that I will focus on grade 12 and grade 11. So if you want paper 2, make sure that you subscribe so that I will publish part 2 before you write it. Okay. Now the last one. Charge might have 350 for alteration of a repairs of tower, and might have promised to pay the amount at the end of the month. Remember, they said alterations are recorded under fee income. A fee income, which means that fee income is income. It must be credited. Fee income. This side, did we receive cash? No. Which means that debtors control. He still owe us because he's gonna pay us at the end of the month. Okay. No markup must be done in this case because this is not sales. Okay, it's fee income, it's other income. And amount is how much? It's 350 of plus and 350 of plus. This side was unchanged. That's how we do accounting equation in this question paper. So what I'm doing, guys, because it's a lot of questions, I did them in a different days and combined them into a one video. So guys, it's not easy, to be honest, to record video and edit. I have to make sure that the mic is working, the question paper is appearing. But if people are just enjoying and learning into our videos and never subscribe, it's not good, guys. It's discouraged us to keep going, because it's not easy, to be honest, to do video, and at the end of the day we have to upload them using a lot of data. So please subscribe, okay? And also those who want to join extra class, guys, please make sure that you do so. And if you watch this video later, when the days of writing are very close, just know that for grade 11 we are starting from 4 January 2025 and come and pay at the end of December, so that January, when we start with other learners, you will also start with other learners and enjoy learning in Accounting Solution SA group. Okay, now let's go to the next one. Let's look at this question paper that we have. So it's one of the previous question paper which was written in September. Okay, they say that it's question 1 and it's 60 marks. Imagine 60 marks for financial statement. So basically income statement is 43 marks. What we are going to do is 43 marks. So already if you manage to get everything in income statement, guys, you already pass your test. So let's start. A sole trader, income statement and notes. Use the following information of agri traders for the financial year ending 28 February 2019, and the business is owned by Kolani Maduna. Okay, so our financial year, guys, is ending 28 February 2019. Remember, financial year must have 12 months. We are preparing for 12 months. So if our year is ending February 2019, which means that it started 1 March 2018 last year. It started 1 March 2018 last year and end 28 February. So when we said a reporting period, guys, it doesn't mean that it's gonna every time start January and up to December. No, you can start your business around June, which means that your year end is going to be the following year around June, the time that you started your business, because it must be 12 months in overall. It started 1 March and 28 February, which means that the coming year is starting 1 March on the next day after 28 February. On the next day is 1 March 2019. It's starting another year. So everything that we are going to record under income statement, it must be for this period, and it must be for 12 months. Okay, let's start. Then we have 1.1, prepare the income statement for the year end 28 February 2019, 43 marks. That's what we are going to do. Then they give us pre-adjustment trial balance. Okay, and the most amount that we are going to use, guys, is from nominal account section, because nominal account section, it has been credited for what? For income statement. Okay, even though we're gonna pick some of the amount under balance sheet, but not exactly as it is, but to assist us to calculate something like interest. Okay, so let's look at the nominal account section. We have a debit side and credit side. Obvious, when we talk about debit side, think about expenditure or a loss. Credit side, think about income, like sales is on the credit, and the other one we have a rent income on the credit, because it's income. Income is always on the credit side. Okay, let's start with the first part of sales minus cost of sales, and it gives us gross profit. Okay, a sales amount that we have is 1.7 million. The first things, guys, you open a bracket and you take your amount of 1,792,840. There is no way that they can just give you a sales and you just record it as it is here. No, you are going to first subtract debtors allowance. Why is debtors allowance? Because those goods, they were returned by the customer. They are no longer part of sales. If you give someone a good, and that person that said, I am going to pay you, but after a few minutes, that person returned that thing and said, I'm no longer going to pay you, which means that it's no longer sales, that thing. You have to subtract it because it's no longer going to pay you because they return your goods. Okay, and then if you check debtors allowance that we have is 21,840. Then now we can close and calculate the total. Then the total is 1,771,000. Guys, there is a 3 marks here. 1, 1, 1. Just like that. Very simple. Just like that. But guys, sometimes you will find that there is something that was returned and is on the transaction. But in this question paper that we are doing now, it's not there. So let's not waste the time. Check other videos so that you can check a transaction that you can also subtract here. You can find that there is more than 2 balances here. Okay, then cost of sales is not affected, which means that we're just gonna subtract the amount that we have, which is 840,000, and sales minus cost of sales is give us gross profit. This one minus this one is going to give us amount of 931,000. Just like that. Okay, now let's proceed. The next one, we have other operating income. Okay, here I have to create a space before operating expenses. I have to create income space. Okay, we have other income. Okay, the income that we had in this case, we have a commission income, and we also have rent income. Okay, this is what we have. Okay guys, listen very, very careful. Remember, we can't be able to show 2 pages at the same time this side. So what I'm going to do, we are going to do a first simple part for all transaction. Then after that, we're gonna do adjustment. Okay, now this is what we are going to do, and there is a max for free for this. Okay, if you check, we already drafted our income and expenses. These are the expenses. Okay, if you check, we have let's go to nominal account section. We have commission income and rent income. So what you need to do, you must open a bracket for every income that you have before you read the transaction. Okay, for commission income, we have amount, is just copying and paste guys, it's 30,620, and for rent income is 66,800. Okay, so guys, there is a max for this, that just to copy from trial balance and paste it here. Then after that, we go to transaction and read. After read, it's either we're gonna plus or minus, or we just take it as it is in the total side. Okay, now let's go to expenses. Expenses, number 1, we have salaries and wages, insurance, bad debts. All of them expenses are on the debit side. Okay, depreciation was given in this case. Salaries and wages, guys, we're gonna open a bracket and write 187,000. We open brackets for insurance and said 25,000. Bad debts 17,600. Stationery, we have a 28,640. Telephone, we have 42,900. Bank charge, we have 22,800. Packing material, we have 40,000. Advertising We have 11,208. Okay, then trading stock deficit and loss due to fire, we're gonna do them separate. Then we also have a fixed deposit. Okay, we have interest income under fixed deposit of 1,600. Okay, these two we're gonna do them last because we have to go back to balance sheet section. Okay, but I'm going to show you later on. Okay, now let's go to transaction part. A transaction part, we are going to read additional information number 1 up to 8, adjusting them one by one. Okay, let's start by adjusting the first one. Received a first and final dividend of 40 cents in the rent from the insolvent estate of Pakati, a debtor who owned amount of 1,600. The remainder must be written off. No entry have made as yet. Ne? In other words, in this case, guys, they want us to write off a bad debt. This person was owing us 1,600. Okay, this person was owing us 1,600, and from that 1,600, they say that he managed to pay only 40%. 40 cents is the same as 40% in calculation, which means that the 60% he failed to pay, which means that we must write it off as a what? As a bad debt. When we write off amount as a bad debt, okay, this is what we do. Because he paid 40%, which means that 60% must be written off. 60% of 1,600 must be written off. So if you do this calculation, we are going to get amount of 960. Where is bad debt? We check bad debt here and say we add another 960 that has been written off, and we close it. Okay, we're gonna get 18,560, just like that. Okay, this person, bad debt simple means that we have a bad in a debt of the customer. Customer didn't pay us, and now we are give up in that this person is no longer going to pay us. That's why it's an expense. Okay, moving to the next one. The telephone account for February 2019 amount of 1,830 was still outstanding. So this amount of telephone, we have to add it because it's outstanding. I'm gonna explain again. Why are we adding it? Remember, the principal said we must record for full 12 months whether it has been paid or not. It must be recorded. As long as it's 12 months, is acceptable under income statement. If they record 13 months, you must subtract 1 month so that we're left with 12. If they recorded 10 months, you must add another 2 months so that it make 12. It must be always 12. That's what they're saying. So any transaction that they said outstanding, go and edit, just like that. Okay, then if you calculate, you're gonna go to 44,708. 44,708. Okay, we are applying the rule of matching concept. Matching concept under the GAAP principle. This principle said all incomes and expenses must be recorded for that period of the year that we are doing, which is 12 months. Okay, make sure that you master that principle, because whatever that we are doing is matching concept. Okay, even this one that we add is because it has been written off within this reporting period that we are doing. That's why we are adding it. It belongs to this year. The next one, a rent for March 2019 has been received. Before we even go forward to this transaction, they receive amount for March 2019, and our year is ending February. They receive for March, the following month. That amount must be subtracted. It's for rent. It must be subtracted. Now the question is, how much are we going to subtract? it does not belong here because it's March. It's for next year. It must be recorded next year. Okay, it's like income received in advance. Okay, they say that the rent was increased by 600 per month with effect from January. They said from January up to March there was increase of 600. So it's 600 for January, 600 from February, and 600 for March. If you add these two, it's 1,200 plus 600 is going to give you 1,800. This was increased. So in order for us to calculate it simple, this is what we need to do. The rent was 66,800. We must first subtract this increase so that we can divide it by 13. Why 13? Because they paid for 13 months. Okay. If you subtract, let me calculate here. If you said 66,800 minus those increase first, so that we can get before increase. You're gonna get here. You're gonna get 65,000 and divide by 13. It's gonna give you 5,000. 5,000 is monthly rent before increase. Because we are subtracting the month of March, which already included the increase, we must say 5,000 plus that increase of 600, and it's gonna give you 5,600. Just like that. Okay, minus 5,600. Then there was a 2 marks allocation for this one because it was a bit trick for grade 10 student. Okay, and you're gonna get 61,200. Okay, because commission income, there was no any other income or adjustment, is gonna be recorded as a receipt, is 30,600. Then other income in total, we can calculate it as a 91,820. Okay, let's proceed. Now we are going to transaction number 4. The loan statement received reflects the following. We have a balance at the beginning, we owe 300,000 and we make a payment of 92,000. Interest is not given, they want us to calculate, and the balance at the end is 234. So what do we do in this case? It's very simple. You take 300,000 and you minus the rest. 300,000. Okay, let me show it here. 300,000 minus 92,400 minus 234,600. Then if you minus this, you're gonna get the interest on loan, because they say provide interest on loan, which must be recorded as interest expense. If you do that, you're gonna get 27,000 of interest. You must write it with brackets because interest expense is the reduced net profit. Okay, then the next one, insurance included. Insurance include an amount of 1,920 paid for period of 1 January 2019 to 30 June. Okay, they said inside the insurance amount there was a portion of 1,920, of which was paid for period of January up to June 2019. Remember, our year must cut off on February, which means that there was a month that was paid in advance. The only month that belong to this period, it was January and February. From March up to June, it does not belong here. March up to June, I think it's gonna be how many months? In total, this month are 6. January to June is 6 months. Then now, we want to split. We want to take out those months that does not belong here. It's how many months? It's gonna be 4, because it's from March up to June. It's 4. Those 2 months we don't have to subtract them. They belong here because they are still within this period. Okay, if you do this calculation, you will find that under insurance, we are going to subtract amount of 1,208 because this is advance payment, so it must be subtracted. It does not belong to this reporting period, it belongs to next year. Is 23,720. Very simple stuff. Then the next one, provide outstanding interest on fixed deposit. Outstanding interest on fixed deposit. Okay, if you check, they already recorded interest income here of 1,600, but they want us to do what? To provide the outstanding. How do we get outstanding? Very simple. Interest, this is how it was supposed to be calculated. The interest is 8% per annum, and the amount is 48,000 of interest on fixed deposit. Okay, it is 48,000, which was supposed to be calculated by 8%, and the answer is, it was supposed to give you 3,840. This is what it was supposed to be recorded, 3,840, but they recorded 1,600. When they said provide outstanding, you must find what are you going to add here. This one minus this one is gonna give you 2,240. Then it's gonna give you outstanding. 1 mark here and 1 mark here, just like that. Very simple stuff. Okay, now moving to the next one. There was a fire in the business on 20 February 2019 and merchandise was damaged. The insurance company has agreed to pay only 80% on the claim as goods was underinsured. Their settlement check was 12,800 and will be received during March 2019, which means that there is no compensation that we need to record here because it's going to be received March next year. So we don't record it, it's for next year. No entry has been made. So now, because the damage happened in February, we must record what? A damage here. Okay, now this is going to affect loss due to fire and the trading stock deficit. Okay, let's start by loss due to fire. Loss due to fire, it can be calculated in this way. Remember, let me show calculation. Remember, they say that 12,800 is damage of 80% that we receive. So those people, they pay us only 80%, which means that our loss is how much? It's 20%. We are looking for 20% of loss out of, this is not total, they only paid 80%. So if you do this, you're gonna get the right answer, exactly that what we are looking for. It's gonna give you a amount of 3,840. 3,840. This calculation can be shown here. Multiply by 20 out of 8. Guys, be very, very careful. It's not always the case where you just said 20%, 80 over 100, 10 over 100. No, read translation and understand, because this is kind of trick that they are testing mostly when I check the question papers. Okay, you use the formula, what you want on top and what we have on the bottom. What we have, you must be very careful with it so that you get the correct answer. Okay, now this transaction is also going to affect trading stock deficit. Okay, but when you calculate a trading stock deficit, guys, that's where you start. You must start with the balance that you have on your balance sheet section, which is trading stock of 88,000. 88,000 on the balance. We just copy it on the trial balance. Then after that, you go to the last one, stock on hand, number 8. A trading stock on hand that we have, it was 71,000, and minus a total loss. A total loss, so guys, it's not 12,800 and it's not this one. It's the total loss that incurred. Okay, this is how we're gonna calculate it. A total loss is 100%. 12,800 multiplied by, we are looking for 100% total loss. What they paid and the damage that we left with, over what we have, which is 80%. If you do this calculation, let me calculate, because on the answer that I have, they just write the final answer. 12,800 multiplied by 100 over 8. We're gonna get 16,000. So if you do this calculation, I believe that is going to give you 1,000. Okay, that's how you calculate it. This needs some more practice, so that you will be able to know what kind of trigger that you are going to deal with when you write your test. So before we proceed, guys, please make sure that you join our online extra classes so that you can learn with other students. So for term 3 and term 4, we increased the class. We no longer attend once a week. Now we are going to attend twice a week at a cost of only 100 Rand per month. So make sure that you communicate with your parents so that they can be able to know that there are some classes that you want to attend online, so that you will be able to learn with other students. When we do a live classes, you will be able to discuss with us on WhatsApp and so on and so on, and get some question papers and solutions just like that. So we have another tutors that are going to assist you as well, so that if you have maybe a homework and you want to ask something, you will be able to do that on WhatsApp if you are part of our extra class. Okay, and also guys, make sure that you subscribe to this channel, so that when I post the video, immediately you're going to be notified that there is a new question that has been posted for grade 10. And this channel is also going to help you when you go to grade 11, grade 12, and the university or any other institution that you are going to attend accounting, because we do accounting for all levels in this channel. And also guys, if you don't want to join those extra classes, make sure that you click a join button, so that you can watch other extra videos that we posted for membership. I think it's only 9 Rand 99, or the other one is 19 Rand 99 per month to watch full videos. If you check this video, we only do income statement. There is other extra video that we did balance sheet and other thing. So make sure that you join, so that you can also learn. Okay, now moving forward, moving to the next one. And also guys, a study guide for grade 10 student is now out. Okay, so if you want a soft copy is only 100 Rand. When we said a soft copy, guys, this is a PDF that we can also share to you on WhatsApp or on email. Then you're gonna read it like a soft copy, like a paper that is inside the cell phone. It's not a hard copy, because I saw on the previous term some people, they were asking what is soft copy, what is hard copy. Hard copy is a textbook that you can hold it with using your own hand. So for that one, because we have to print out, make a delivery, of course it's gonna cost. So for hard copy, a textbook is only 300. This is for hard copy. Okay, it doesn't matter whether you are in Cape Town, Limpopo, Eastern Cape, Western Cape, we can deliver through a PayPal. You just text us on WhatsApp, make a payment, so that we can be able to book your delivery. Okay, Now moving forward to the next one, let's finish up the part that we left with. So because we already do that, we already covered this one. I think we left with only picking material. Picking material, if you check transaction number 8, we have 950. So on hand is always subtracted like this 71,000. So we're gonna subtract amount of 9,500, and we close the case. No, it's 950, and it's gonna give us 39 and 50. Okay, this one does not have transaction 22,800, and advertising, no transaction 11,280, and stationery, no transaction is 28,640, and the other one, salaries, no transaction, is gonna be like this, 187,000. Okay, I think we recorded all of them. Make sure that you verify the calculation on your side, guys, because you can see I'm no longer calculating here. I'm just taking what I have drafted out. It can happen that instead of writing this 11,000 here, after picking material, I write it below. So, but the most important is to understand the principle, not to identify the mistake. Like there is other video that I did. I think I did a mistake. Instead of recording this 23,000 straight to here, because I don't even have a ruler, I recorded below here. I saw some comment. So guys, you have to make sure that you verify those calculations, because teachers, they also do mistakes. Okay, so but all the principles that I was doing here, they are very correct. I don't do mistake when it comes to principle. Only a figures, or maybe when we left some zeros, yes, that's what we can do, but the principle is always on the right track, no error. Okay, now let's calculate operating profit. Okay, in order for you to calculate operating profit, you must take other income, you subtract expenses. Total expenses, we have total expenses, we have 1,555,660. Okay, you take income minus expenses, then you're gonna get operating profit of 467,160. Okay, then after that you add with interest income, then you're gonna get profit before interest expense, which is 471,000. Then after that you subtract interest expenses, then you're gonna get your net profit of 344,000. That's how we do it, guys. Now let's look at the question paper that we have. Let's wrap up our notes and we fill the balance sheet. Okay, they say use the trial balance and additional information to prepare the following notes to the balance sheet as 30 September 2019. Inventory, trade and other receivable, owner's equity, trade and other payable, and after that we're going to the balance sheet or statement of financial position. So everything, it was containing 40 marks. Okay, extract from post adjustment trial balance of Tabo Shoe on 30 September 2019. Okay, they give us a trial balance which contain a balance sheet account section. Okay, now let's start with our notes. Okay, they give us capital drawings, trading stock, fixed assets, debtors control, which means that we have the balances before we even read the adjustment. If you look at our balance sheet, we have a trading stock amount, okay, which is 105, which is going to fall under the inventory. A trading stock is the same as inventory. Guys, firstly, you must know what fall under inventory. Okay, if we have stationery on hand, consumable store on hand, a trading stock on hand, we have to put it under what? Under inventory. all those items that I mentioned, they fall under inventory notes. Okay, we have a trading stock. A trading stock. Okay, a trading stock. At the beginning, it was we have 105,000. Before we proceed, we must first check if there is no any adjustment that is going to affect this one. For example, this is the inventory that we recorded at the beginning. It can happen that the owner donated some inventory which we have to subtract. It can happen that the owner withdraws some inventory which we need to subtract. So now let's check. Additional information number B. They said on 30 September 2019, after fiscal stock taking was performed, Tabo took a shoe with a cost price of 2,000 for his personal use, and this inventory was not recorded. We no longer have this inventory because he took it for personal use, minus 2,000. Okay, which is going to give us an amount of 103,000, just like that. Okay, now let's check. If you check, we have a consumable store on hand of stationery of 900. Okay, you can just say stationery on hand of 900. Okay, so in this case, we no longer have any other transaction that is going to affect this note. We can calculate a total, which means that the total is going to give us 103,900, just like that. Okay, now let's proceed to the next one. The next note is trade and other receivable. The first item that you need to check under your trial balance is debtors control. Debtors control that we have, let's check debtors control. There it is on the debit side, is 80,000. Okay, we have to start here, 80,500. Then you check if there is any additional information that is going to affect this one. Okay, let's check additional information number F. An amount of 500 was incorrectly credited against the debtors control account. This amount was received from C, else a debtor who his account was already written off as a bad debt. So this account was credited instead of doing what? Of debited. Okay, what do we do in this case? Obviously, we have to do what? We have to reverse it. And something that has been subtracted, when we reverse, we add it back. Okay, which means that we are going to add back 500. Okay, and it's gonna give us 81,000, just like that. Okay, make sure guys, make sure that before you start practicing balance sheet and the notes, know the format, know what fall under trade and other receivable, know the format of owner's equity, which does not change. It's always like this. Know this skeleton, because if you don't know the skeleton, even if you know the principle that I'm teaching now, you are going to suffer to know that under trade and other receivable we have debtors control. You will put creditors control, which is very, very wrong. Okay, now let's go to the next one. The next one, we are going to prepaid expense, accrued expense, that fall under trade and other receivable. We need to check them. Okay, now let's check them. Transaction number, on the trial balance, we have accrued income of interest of 8,700. Okay, so under additional information, we don't have any other transaction related to it, which means that we're gonna record 8,700 from our trial balance as it is. But if there is any, you open a bracket and you do those calculations. Okay, and the other one, prepaid expense. Let's take prepaid expense under our trial balance. Prepaid. Okay, after accrued income, we have accrued expense. Prepaid expense, we don't have it. Now let's take on our additional information. They said number E, too much insurance was paid of 950. This amount must be used to settle insurance due to the following year. Okay, which means that in this case, because amount of insurance was overpaid and is for next year, we regard it as a what? Prepaid expense. Prepaid expense, prepaid expense, guys, is amount that has been paid in advance. So in this case, because this expense, okay, let me explain it properly. Prepaid expense, so that you will know what you do under balance sheet and income statement. Prepaid expense. Okay, guys, prepaid expense. This expense has been paid for next year. Under income statement, you subtracted this amount, but under a balance sheet, you add it. When you subtract it under income statement, it's because you want to add it under what? A balance sheet. Okay, it has been paid in advance and we own this amount because these people haven't yet performed anything for us. Okay, which means that now what to do? We have to add it, and the amount is 950. It's 950 prepaid expense. Okay, so under this note, we no longer have any other thing on this question paper. Okay, it's gonna be 9650. Okay, now let's move to the next one. The next one, they said we have to prepare owner's equity. A very simple note, guys. The first step, we have to record a balance, opening balance. If you check under our trial balance, we have a capital which is opening balance of 1,036,470 is opening balance. Then the next one, they said the net profit for the year. Okay, if you check information on top, they give us a net profit. Okay, they say that a net profit is amounted to 774,300. Okay, additional capital, the next one. Let's look at transaction number A. Thabo Sepere transfer a vehicle to the value of 100,000 to the business on 1 January 2019 and is not yet recorded. Okay, additional capital of 100 was contributed. It's a plus. If we find drawings, we have to subtract because drawings does not add value into the business. It subtract what? It subtract the net worth of the company, of the owner. Okay, now let's check if we have drawings. Let's first check on top. We have drawings of 33,870. Let's open a bracket, 33,870. And remember, the owner withdraw what? A stock under transaction number 2 of 2,000 for personal use. We plus 2,000. And then we're gonna get 35,870. Just like that. Okay, after that, you add everything and you subtract this one. You will get amount of 1,874,900. Just like that. That's how you prepare this note. This format, guys, is always the same. Opening balance, copy and paste. Profit for the year, copy and paste. Additional capital, you read the first transaction or the second transaction, you're gonna get it. Drawings, if they say the owner took something, it's drawings. The other one, you will find it under trial balance, and you add them together and you get the balance, just like that. 7 marks for free. Now we are going to the last note. trade and other payable. The first one, we check creditors control under our trial balance, which is 55,000. It's copy and paste, guys. Copy and paste. Now let's check if we have income received in advance. Okay. Under trial balance, we have accrued income. This one. And accrued income, they said, is how much? 8,700. 8,700. We are writing it here because we don't have any other adjustment related to it. Okay, it's accrued income. Let me copy the correct balance. Accrued expense, accrued income. Okay, guys, this one is not accrued income, it's accrued expense. Accrued expense, and the amount is 5,500. We just copy and paste it because we don't have any other transaction related to it. Okay, and then the next one we have, let's check SARS pay as you earn. SARS pay as you earn is given 4,600. 4,600. Now accrued income received in advance, we can't see it on the trial adjustment. Let's look at it under additional information. Additional information number D. Rent income account reflect a total of 102,000, and it is include the rent for the 3 months. Rent in advance. We receive rent in advance. This rent of 102,000, they pay extra 3 months. Remember, normal month is 12. They pay another extra 3 months, and they give us how many? 15 months. Normal months of accounting is 12 because we record yearly, and they say they paid advance of 3. We want to check how much per month was this. Okay, if you divide and you multiply by 3 so that we can get those 3 months, you will get, if you divide this one by this one, you're gonna get 6,000 something, and you multiply by 3, and then you will get amount of 20,400. 20,400. Then after that you calculate the balance, and you're gonna get 85,500. Just like that. Okay. Now let's proceed. Because we are done with our notes, now we can go to a balance sheet. A very simple one. Because guys, once you're done with a note, balance sheet is straightforward. Let me show you. Okay, let's look at the balance sheet. We have prepared inventory already, which means that inventory, we have amount which is 103,900. We have prepared trade and other receivable, which is 90,650. This one they were already given under answer book. Okay, cash and cash equivalent, we must work this one. Capital is this one. Okay, it's owner's equity, which is 1,874,900. Okay, and the next one, trade and other payables, is this one, which is 85,500. You see, almost we have done almost everything. Okay, now we are going to work out the rest that are not given there. Okay, now we can close this part. Now let's come this side. Now let's check. Where do we start? Cash and cash equivalent. Okay, we know this note. There's a note of cash equivalent where we include bank, we include petty cash, cash float, we include all those things. Okay, but now guys, remember, they must be positive. They must be on the debit side. If they're on the credit side, it's overdraft. Let's check. Bank, we have amount of 710, but on the credit, it's not going to fall here. It's bank overdraft. It's negative because assets increase on the debit side. Bank overdraft of 710,000. Okay, now What we can add is the rest, which is cash float and petty cash, because they are positive. 8,500 plus 5,000, which is going to give us 13,500. Okay, and the other one, we have a loan and current portion of a loan. Okay, let's take a loan amount. A loan amount, it was 120,000, and they give us information number C. An installment of 200,000 is repaid annually on the loan at ASA on 31 December. So this loan is going to be paid within 12 months, which means that it's no longer belong here. Minus 20,000 is going to be current portion of loan of 20,000. Let me explain this again. When we say the non-current liability, we are talking about a long-term liability which is going to last more than 12 months. Current liability, these are the short liability. Not short-term liability that are going to last less than 12 months. We are going to pay them within 12 months. So this 120 they said is going to be paid on 31 December, which means that it's no longer long-term. We have to remove it from long-term to a short-term. We call it current portion of a loan is going to be paid within 12 months, just like that. Okay, now let's check which one we left with. Capital we did, loan we did everything. Then current liability amount is going to give us amount of 100,000. Okay, a total asset is going to give us 2,790,400, and the other one, current liability, this one. Okay, this one is from here, 100,000. This side is 815,500, and equity is going to be the same amount of 187,900. Okay, then total assets is equal to total equity and liability, which is going to give us 2,790,400. That's how we conduct a balance sheet, guys. For those who want to attend extra class are still available. Make sure that you attend, guys. We want to build you to know accounting in and out from grade 10, so that when you go to grade 11 and grade 12, you're gonna kill it and you're gonna get a distinction. So make sure that you join us. Talk to your parents so that they can pay for you for your extra class. You attend with other students and you learn so that you can get a good marks. I hope you enjoy, and the study guide for grade 10 is now available. Soft copy is 100 Rand. Currently we don't have a hard copy which we can deliver, because to print out those textbook is costing almost 400, because it's very long book. So including delivery is gonna cost us more. So let's be patient. For now, let's buy just a PDF so that you guys, you can study, you can get a question like this that we were doing, so that you can prepare yourself. I hope it's going to teach you some principles that maybe you don't know before this video. Okay, so let's look at the question from our study guide. They say ratio analysis. Okay, then they say payable store is a clothing store that sell a cheap imported clothes manufactured in China, and their markup is on the cost price of 75%. Okay, use the given information to answer the question that follow. Payable store, extract from income statement for the year ended 30 June 2019. Sales up to net profit. They give us the column of 2019 and 2018, but in this question they said calculate for 2019. Okay, and they also give us results for 2018 so that we can compare, because we are required to comment. 4.3.1, calculate the percentage gross profit on sales for 2019. Compare the results with 2018 and go to the figure. Guys, each and every ratio that says gross profit on what, operating profit on what, they are saying that whatever that they say first, they are saying that when they said on, they are saying that divided by it. For example, 4.2.1, 4.3.1, they said a gross profit on sales simply means that we have to take a gross profit and we divide it by sales. Then lastly, you just multiply by 100. On, it simply means that divide. Okay. Now, let's take a gross profit. So in this case, gross profit is not given. But it's simple to calculate because we know that sales minus cost of sales is gross profit, which means that you have to take 1,280,000 minus 800,000. Then it's gonna give you a gross profit of 480,000. And our sales, it was given. We just have to divide by 1,280,000 and we multiply by 100 so that we can get the percentage. Then the percentage is 37.5%. Okay, now they say that we need to comment. Okay, let's comment here based on the previous results of this ratio of last year. They say that gross profit on sales last year it was 4.9. Now it's go to 3.7, which means that we are going to comment that there is a decrease. There is a decrease on gross profit on sales. Then we said from 41.9 to 37.5. So it's bad. It's very bad because it's indicating that gross profit is now down. Okay, the next one they said that we have to calculate percentage on operating expense on sales. Operating expense divided by sales. Okay, then it's 4.3.2 operating expense divided by sales. Then we multiply by 100. Okay, then our operating expense, it is not given, but it's simple to calculate. You just take other operating income of 409,200 minus operating profit of 390,400. Then it's gonna give you 118,800 and you divide it by sales of 1,280,000 and you multiply by 100. Then it's gonna give you 9.3%. Now let's comment based on last year. Last year it was 9.5. 9.5% to 9.3%. Is this good or bad? It's good, guys. Because here we're talking about expense. We want expense to go down as much as possible so that we can get more profit. So it's good. This decrease in expense is good. It's only bad in terms of profit. Okay. And the next one, 4.3.3, a net profit on sales. That's what we are going to calculate. Net profit on sales. We're going to take our net profit divided by sales, multiply by 100. Then our net profit is 389,550 divided by sales of 1,280 multiplied by 100 is equal to 30.4%. Okay, let's compare to the one from last year. From last year, it was 35. From 35.1 to 30.4. this is a decrease. So decrease of net profit is not good. Profit, we want it to be more and more and more. So this is how we were calculating this on this question paper. Please make sure that you subscribe, you like, and those who want to join extra class, it's only R100 per month. Do so that you can attend with other students. And those who want a question paper like this, make sure that you purchase our study guide, only R100, a soft copy. We don't do hard copy because it's gonna be expensive to print out. So I'm gonna see you on the next one.